Welcome back to EDS, and in this video we're going to take a look at how you can write your own options contracts, collect a premium upfront, and generate consistent returns year on year. So the first thing we want to do is open up our brokerage platform. It's a Saturday, the market is closed, but we're still going to mock up some positions and see what we can see if there's anything that looks good for Monday. So we want to just open up any underlying. We've got a Boyle open up at the moment, and we want to see the list of expirations. And the purpose of this step here in the process is to lock in an expiration date that we're going to choose. So the one that we're going to choose needs to be a monthly expiration, and it also needs to be between 30 and 60 days out in time. So the only expiration date that seems to fit that criteria right now is December 20th, and that is currently 41 days out in time. So 41 days out in time, we can take that information, come over to our watch list, and simply filter out everything that has earnings over the next 41 days. We do not want earnings to disturb our trade, and we also want to filter out anything with a low liquidity level. And now we'll have a list that looks something like this. I personally like to list everything from high to low IVR. Anything with an IV rank of over 50 can be considered high. Anything below can be considered low. Sometimes over 30 can be considered high as well. So just off the top of just from the top of my mind, just the first thing that caught my attention here is Coin with an IV rank of 43.5. It's got an absolute IV level of 75%, and it's currently trading at just over $270. So let's just have a look at Coin. Um, it has some nice strikes to choose from, some nice deltas, and as we can see here, we can. I personally like to be anywhere between 15 and 20 deltas. So 17 deltas on the call side seems good, and we can go with, say, a 15 delta on the put side. Now, there clearly is some skew here, but that's absolutely fine. Um, Generally speaking, you don't know anything that the market doesn't already know. Don't fall into the trap of thinking that you know something because you don't, unless if you have insider information, but that's illegal anyway to trade on insider information, so it's irrelevant. So, as we can see here, we've got a strangle. This is called a strangle. One call, one put on Coin, which is Coinbase. Um, and there is some skew. So we've got our strikes at 220 and 360. That's our range for the next 41 days. We would collect $1,167 upfront in premium, and our broker is going to require just over 12 grand in buying power to open this position. We would have about a 70% probability of profit and about an 84% chance of hitting 50% of max profit at some point between now and the next 41 days. So, very, very high probabilities. And we would have a daily theta decay of $39. That's just to start with. This will get more and more aggressive as we get closer to the expiration date, provided all other things, everything else is equal. And if $12,000 is too much for your account, you can just buy some contracts to cover your short contracts to limit your loss. So we no longer have an unlimited loss potential. We now have a limited loss potential of $10 minus the premium we collect, $2.55, and that comes out to $7.45 times 100 shares, because 100 shares per options contract, or each options contract controls 100 shares. So we've got a max loss here, and our broker knows what our max loss is, so it's only going to require that amount in buying power. So we've reduced our buying power requirement down from 12,000 down to 745. We do now have a lower probability of profit, only slightly, but we also have a higher return on capital. So one is not better than the other. It just depends on what you need to do for your portfolio. If you are going to cover, this is called an iron condor. If you are going to do an iron condor, by all means, you can go a little bit more aggressive, go more heavier on the close to the 20 delta as opposed to close to the 15 delta, and you will get more premium. You will have a higher, a juicier return on capital this way. So, with that being said, that's how you can find and manipulate positions. But how do you know how much buying power to allocate to your positions? Well, we can do that by using our free position sizing template that everybody can use. The link is in the description, and the way it works is you enter in the size of your portfolio and what the current VIX level is, and then everything will then be automatically calculated for you. It will tell you exactly how much buying power you should be allocating to any single defined risk, undefined risk positions, and how much how much of your portfolio you should be allocating to short premium strategies in general. As long as you follow this, you'll be absolutely fine. And this doesn't take into account any adjustments or managing risk, etc. So if you do know how to do that kind of stuff, which we teach inside EDS Premium, and we also for free on YouTube. But if you do know how to do that stuff, then you'll be even better off. So this is just a worst case scenario to build your portfolio from. Like we said, if you do want to learn in more detail, click the link in the description, head on over to EDS Premium and get yourself signed up. Once you're inside, you will have access to our portfolios that will allow you to see what positions we're placing, how we're managing risk, how we're making adjustments, so you can learn and also copy us. There's also a full course inside, so no prior knowledge is required. It's a private community, so you can speak with myself directly and with other like-minded individuals. There's also a 100% money-back guarantee. So after 6 months, if you have followed our positions and studied the full course, and for whatever reason you're not profitable, then we work with you for free until you are, or you can request a full refund. So it's risk-free on your part, and right now it's £1 a month to join. The price will be increasing, however, once you're in, the price is locked in. So you are rewarded for getting in early, and with that being said, I will see you guys on the inside.